So I think MSTR is a very, very long time horizon hold. If you have, let's say, 10 plus years, then you'd probably want some MSTR in your portfolio. Even then, you probably don't want to go all in, right? I would say don't go all in no matter what, because MSTR has counterparty risk. It introduces counterparty risk to your portfolio. If you let's say compared to Bitcoin, that was one of the questions you asked. Compared to Bitcoin, holding MSTR is much, much, much more risky because, for example, they have people controlling the company. Those people can change their decisions. They can make bad decisions. I don't personally think they will. So I personally think that okay, holding a little bit of MSTR is great. I personally have MSTR in a locked-in retirement account, and I don't plan to sell it. I plan to just hold on to it for as long as I can. If it goes to zero, it goes to zero. I don't really care. I wasn't gonna be able to access that money till I'm like 55 anyways. I'm 32 now. So 23 years from now, the way that I look at it, if Bitcoin is doing well, I probably won't even need that money, right? But that's not the case for everybody. People have their money in their Roth IRAs, their 401ks, their different RSPs, TFSAs, whatever it is. They have their money in there and they actually want to use that as a retirement account. I would say don't buy MSTR unless you have like a 10-year time horizon. 10-year time horizon because it's a company. It has to go through the business cycles. It's also affected by Bitcoin. It also has other risks that Bitcoin doesn't have. It has counterparty risk. It has the risk of, let's say, management making the wrong decisions. It has interest rate risk. It has tons of other risks. I have a whole list of just risks that companies have versus Bitcoin. Having Bitcoin in self custody is freedom, right? Because you know exactly what you have. It's a bearer asset. You know exactly what you own. You know exactly where it's going. You know exactly. I mean, in the long term, you know exactly where it's going. It has a finite supply, whereas with MSTR, we've seen it ourselves. They can just create more shares whenever they want to, right? And they can keep creating more shares. I don't personally think that they will dilute shareholders and they haven't been diluting shareholders because the issuance of their shares has been accretive, where it adds more value to the shareholders than it takes away because they keep buying more Bitcoin. And I think that's a good thing. Um, but again, having Bitcoin in self custody is no. There's nothing else that competes. Bitcoin is the only thing that you can do that with. Let's say stocks, if you wanted to take self custody of your MSTR shares, you really can't because it costs way too much. It'll cost like $300-400 to get a stock certificate. Then you have to wait, let's say 5, 10, 15, 20 business days in order to get that stock certificate put back into your account if you want to sell your shares. So it's very difficult to trade with. Whereas with Bitcoin, take self custody, it'll cost you like 50 cents. You send it back into your exchange, it'll take 10, 15, 20 minutes, cost you another 50 cents, a dollar, whatever the transaction fees are at the time. But in terms of the returns, I think it's a no-brainer that if Bitcoin does well, MSTR will do much, much better because it's, as they call it, amplified Bitcoin. It is they're continuing to add more Bitcoin, meaning that the returns from MSTR, because it's leveraged, are going to be higher if Bitcoin goes up. MSTR's returns are going to be higher than Bitcoin's. But if it goes down, MSTR returns are going to be much, much lower than Bitcoin's. Like you're going to lose money much faster with MSTR, but you have to handle that volatility. That's the key. MSTR is going to be much, much more volatile than Bitcoin, and we've already seen that.
I want to add, and you're 100% correct, because I think people don't realize that they compare strategy with Bitcoin way too much. Bitcoin has all the risks that Bitcoin has, and MSTR has all the risks of Bitcoin plus the specific
Exactly.
ones
Yes.
of MSTR. And
Yes.
one
Very well
thing I
said.
want to, yeah, and one thing I really want to note here is also with a company and a management team, you almost have no like not almost you have to keep up with it. You
Yes.
cannot just not look at it.
Yeah.
Bitcoin, I personally would say, is at the stage where you can buy it and just forget about it.
Yeah.
Strategy is not something like that. A company being, we've seen it in history so many times where a very dominant player like Nokia had an amazing position. The market was growing. Like you could just see the market forming around Nokia. You could see what the amazing phones they have at the time. But then Apple comes around, Google comes around, Android comes around, Samsung comes around, and they just like outcompete them with innovation. Now,
Yeah.
strategy has the advantage of having Bitcoin, which is like you can't steal Bitcoin away the same way as Apple stole the market share of Nokia away. But it's still a centralized company that you have to investigate, not every day, but like at least once a month. You should look at it, what they're doing. Maybe see some podcasts. Maybe, I mean, we talked about that recently. I love to see the earnings call, because at least to see the actual numbers, what they're planning, what they're doing. I get a feeling if they're on a good way or a bad way. You can also look at people that you trust that interpret the earnings call. Is probably a better listen, because it can be a little bit dry and a little bit boring for some people. I love it. It's for me like Champions League. It's a really cool thing. So like you kind of have to keep up with what they're doing in order to stay invested. And so with Bitcoin, you can just invest and like chill out.
Yeah. Exactly. It's the only the way that I like to say it, it's set it and forget it. Buy Bitcoin and chill. You don't have to do it like it's like Netflix and chill, but buy Bitcoin and chill. You don't have to do anything else, right? All you have to do is buy Bitcoin, and you know what it's going to do. It doesn't change. That's the key. It's like gold. It doesn't. It just doesn't. You can't change it unless there. Let's say you can't change the foundation, the fundamentals of it. I think this is a great way to say it. It's changing, but it's not changing. The things that you need for it not to change. Let's say the 21 million supply, the block sizes, um, how often the blocks come out, the difficulty adjustment, all of that stuff, it's always going to be there. But if there are things that we need to change, let's say there are bugs that need to be fixed, all of that is going to be taken care of. And all of it is you have to kind of to make significant changes to Bitcoin, you need to get the consent of everybody who's saving in Bitcoin. And they're probably not going to try to screw themselves over, which I think is a really important factor. Whereas with strategy, I think Saylor owns like 40% of the stock, and that's huge. So he has significant sway in where the company goes. And you never know. What if he becomes coerced? What if the government says, "Hey, you need to give us your Bitcoin," and he starts voting towards that? Like, "Hey, we should share our Bitcoin. We should make this the national strategic reserve of Bitcoin." I'm not saying that's going to happen. I'm just saying you never know what could happen because you don't know what's actually going on in somebody's mind. You never know what somebody's true intentions are. For example, for with us, you never know what if we're building an audience to just scam them eventually, and but we're not. I mean, obviously we're not. But that's the thing. There's a risk involved, and you have to account for that risk. Whereas with Bitcoin, that risk isn't there because Bitcoin is not controlled by humans. It's controlled by it is incorruptible software. Whereas humans are corruptible. They can be corrupted very, very easily.
Interesting. I never researched how much shares Sailor owns. Okay, see, there's the difference between economic equity and voting power. So he owns 9.9% of the economic equity in strategy, but he has the Class B shares, which count for 10 votes each. And so for some reason, he has 43 to 46% of the voting power of strategy. Interesting.
That makes sense. Because I think they probably create more Class A shares, which don't have as much voting rights. Maybe they have, I don't know how that works, but maybe it's like one vote per share. Whereas the ones that he has, they give you 10 votes per share, which I mean, it makes a lot of sense. Because, oh yeah, great. Yeah. I thought it was around 40%, but yeah, 43 to 46% makes a lot of sense.
Yeah, it's like 10% of the economic thing and 40% of the voting power, which is an interesting thing because it's a whole nother discussion. But
Yes.
people always complain like, oh, those rich billionaires, they earn so much and they have so much power. I make kind of the counter argument to that, because no matter if it's Elon Musk, Saylor, being like Bill Gates, or like whoever is your favorite billionaire to pick on, look at look at what share of the company they still have after founding it themselves. Like Saylor is the founder of strategy, and he owns right now 9.9%. So if sale a strategy is worth what's, let's say, $60 billion, let's around what is it, six
Six
billion
billion or
dollars
so.
is his share. So the 54 billion US dollar that is strategy he created for other people. So
Yeah,
individual shareholders, other companies. So he created 54 billion US dollars of economic value for other people that he does not have. And so this
that's
is
crazy.
always the thing. Like look at how much economic value Elon Musk created for other people. Like he paid 1 year more taxes than whole countries have income
Yeah,
in
that's true.
taxes. And so like that's I mean, it's a whole nother discussion, but it always reminds me of the people always look like I can be like, oh, like Saylor has so much wealth and like he owns like 10 billion dollars in Bitcoin and shares and all of that. It's so unfair. But I can also look at how much value he created in life and how much economic value he provided for other people and concentrate on that. And I think like, yeah, that that if you create 50 billion US dollars, I think you deserve 6 billion.
Oh, 100%. And then on top of that, there's also like, think about it with your book. You're putting in time, you're not getting paid. In 10 years, people aren't going to be like, oh, he put in the time. They're going to be like, oh, why does he have this really expensive book that he's able to sell and he's making so much money from it? Because they're not going to see the value that you put in while you weren't getting paid. Exactly the same thing with Sailor. He was probably running this company. He probably was taking a loss. He wasn't making any money. And now that the company is worth something, he deserves the value that he got. He deserves everything. Like the val like it's crazy that people would say that, oh, these billionaires don't deserve the value that they're just using the loopholes in the system to their advantage. That's all it is, right? They're compounding their wealth and they understood the rules of the system. So why wouldn't they use them to their advantage? It makes sense to me. I mean, I don't see a reason why he shouldn't have 10% of the company if he started it.
Imagine being Sailor after the stock went up. It's I cannot even touch it with the Google because it went up in such a quick amount of time. Like the
Is
the
that like
green point.
330 a share?
Oh yeah, like it's 330, but like the green point doesn't even like go up there.
Yeah, it doesn't even show it.
Uh,
'Cause it was there
uh,
for so little time, right? It was there for like a day or like a few
yeah.
hours.
Like imagine being Sailor of like 330 a share, and then like it dropping down to like $3 US.
Crazy. And
That
he held
must
through it.
be so good.
He held through it.
He held through it, and that not being Apple, not being Microsoft, not being one of the real big companies. I mean, it was still a huge company, but like not one of the big ones. But yeah, we're getting sidetracked as we usually do. But it was a fun one. I think. Really cool. I think I have one more thing I wanted to talk to if you still have a little bit of time,
Of
because I
course.
think we are already a little bit over what we initially said.
We're good.
One thing that I want to get into is, and it was a title of a recent video of you. I think it said something like hard work is not always good, or like not always like it doesn't equal more. I don't know what the title exactly was, but I think that's a really interesting topic, because people think if I just work harder, I get more and I get richer and I get more freedom, which obviously is not true. Ask Chinese people that work in in some
Yeah.
factories like 16 hours a day. They're
Yep.
not more free and not wealthier. How do you look at the connection between the hard work and wealth, and what did you kind of learn from that?
I wanna share a spreadsheet. I think this'll give you, like, a good view of what I mean here. Do you mind sharing my screen? So, okay, so let's say you're working let's say you're earning 7.25 an hour. That's the minimum wage in the US, and you're working every single hour that you're awake for an entire year. You're working 168 hours per week for 52 hours or 52 weeks of the year. You take no vacations, you take no time off. You're just a robot. You're only working. The amount of money that you're going to make is right here, $63,336. So you're working as hard as you possibly can. You're doing whatever you can. You're continuously working, working, and working, and working, and working. And all you're making is $63,336. I think this is just, I mean, this is a summary, right? You can work as hard as you want to. It doesn't matter how hard you work. If you are working on the wrong things though, then you're not going to become wealthy. It's that's that's just how things are. And you can't change that. You can't change that fact. The way that you get paid is by creating more value for other people. Like with your, let's say for example, you're writing a book. How many people are you going to help with that book? For all we know, you could help 100,000 people with that book, and you're going to get paid for that. So if you get, let's say you sell the book for $20, help 100,000 people, you're gonna make what, $2 million from that book. You're not gonna directly make $2 million, but the value of that book, the value that it created was $2 million. If and how long did you put into that book? Maybe a couple hours a day for a year and a half. Let's say you put in 500 hours. 500 hours, and you're gonna make more than this person made from 168 hours, 52 hours a week. So this person right here, this example here, is of a person who's working the hardest out of anybody in the world. They're the hardest worker ever, but they're not getting paid much because the value that they're getting for their time is not as high as somebody who's like, let's say, a lawyer. The the bigger problems that you solve, the more you'll get paid. The more difficult problems you solve, the more you'll get paid. If you can help people to achieve a goal, the more you'll get paid. And then the bigger that goal is, the more you'll get paid. I think that's the key. So let's say if you're a cashier, how many other people can be cashiers? That's a skill that is very widely available. Anybody can do it. You can teach somebody to run a cash register in like 5 minutes. Whereas, let's say your knowledge, the specific knowledge that you have of writing a book, that can't be replicated in a day. That can't be replicated in 5 minutes. So how many people can write a similar book to the book that you have? Your book is based on your experiences, your time, your energy that you put into your whole life. And it's all based on you, right? And nobody can replicate you. So I think that working hard doesn't, working hard is key. It is important to work hard. But if you work hard on the wrong things, like let's say in this case, in this person's example, they're working hard on a $7.25 per hour job, whereas they could put, let's say, a few weeks into learning a course. And like I gave an example in that video of a Microsoft Excel course that I took. It was like $15, but it raised my income from 42,000 to 64,000 per year. $15 investment that raised my income by over 50%. And why would I continue to work for minimum wage if I can do this course and increase my wage significantly? I think that everybody has this opportunity with the internet. You can go watch videos, you can find something that'll increase your income. Working hard is not going to make you wealthy. If it was, construction workers would be the wealthiest people in the world. If working hard was the way to get wealthy, garbage men would be the wealthiest people in the world. I mean, they make good money, but they're not the wealthiest people in the world, even though they work much, much harder than the people who have a lot more money. Like, let's say we go to Michael Saylor. Michael Saylor worked in the right direction. He built this company. He created this company, and now he's probably not working as much as this person here. Like this person here is working literally the most that you possibly can. How many hours per year are they working? Let's see. So they're working this times 52. They worked 8,736 hours and they made $63,000. That's not even possible. That's impossible, right? Whereas if you were to work, let's say if you were to increase your income to $20 an hour and you worked 100 hours a week, you still made more. You almost doubled your income. If you were earned, let's say, $35 an hour and you worked for 40 hours, how much is your income going to be? I don't even know what's going to be. Let's see. 40 hours a week. You make more from working 40 hours a week. You worked a quarter of the number of hours compared to somebody who was making 725 and you made more money. And that's why I think tying time to money is the worst thing you can do. Time is not money. We've been brainwashed into believing that it is. Putting in effort means nothing. If you're putting in the effort towards the wrong things, it's not going to get you anywhere.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.